But when you see the pound hitting a 2-year low, when you see the kind of moves that we are beginning to see in the currency market, that's got to wake you up, because it does impact corporate earnings. It impacts the cost of goods imported and the cost of goods exported. How big of a deal are some of these recent currency moves that we are seeing?
Brian, it's a colossal deal. The spread between the dollar and the other developed world currencies is one of the largest in my career, and it's setting up a very powerful dynamic. If the Fed isn't dovish enough, you're talking about the U.S. Treasury having to intervene to stop the dollar. The dollar is a global wrecking ball. We saw this in 2016. When the dollar soars, it will crush S&P 500 earnings, most of which are outside the United States, exposed globally. And at the end of the day, if they don't stop the dollar, you're going to see the Treasury and the White House step in here in the next month.
And do what? How do they stop the dollar's gain?
Well, there's a number of ways they can buy international assets overseas. They can talk the dollar down. The Fed can, if the Fed, as we saw in December, if the Fed isn't dovish enough, they can do a turn tail. And then in the Fed speak in the following weeks, they can reverse course and provide even further dovish guidance. But net, the beast in the market, that serpent inside the market, is going to break the Fed and Treasury over its knee. The dollar strength will force greater action out of Washington.
Is it going to mitigate what the Fed is trying to do? I mean, all we're talking about is a rate cut, and we'll probably get the rate cut and maybe a dovish view. But if the dollar keeps going higher, is that going to mitigate any positive impact from lower interest rates?
Yeah, it's very destructive. I mean, you got to remember there's 62 trillion of GDP outside the United States, 18 trillion in. So when the dollar soars, and don't forget, there's like 17 trillion of dollar-denominated debt thanks to the Fed globally now, right? Everybody's been, the last 10 years, every country on earth's been issuing debt in dollars. So when that dollar soars, it's very damaging. But Donald Trump has a point. And, you know, he makes a lot of noise on Twitter, but he has some very valid points. The ECB and the European Central Bank has done the differential in easing is about $3 trillion more easing than the Fed has done. Same thing with the Bank of England. So these central banks around the world are easing much more aggressively than ours. Their currencies are imploding. So therefore, their cars and their products are much cheaper over here, and it's hurting U.S. companies, and the White House is going to do something about it.
What are they going to do? What can they do?
Well, they have to do. Remember, Michigan, Wisconsin, and Pennsylvania. Remember that
really,
election?
I hate this. I'm sorry for all the other 47 states. Probably the only 3 states that matter to the election, right there. You just named them.
Absolutely. I mean, remember, the election didn't turn until 2:45 a.m. on election night 2016 when Pennsylvania went Trump's way. So these are major manufacturing states. And there's a number of tricks. If you look back over the last 40, 50 years, the Treasury has intervened before. They can team up with other international central banks globally. They can do a lot of things with the amount of dollars held globally and sanctioned. So there's a lot of tricks up their sleeves, and they're gonna pull every one of them out in the next, say, 2-3 months to contain this beast, this serpent inside the dollar.